Let me ask you something. What if you could get the income you need without giving up the growth that you want? You see, most investors make a trade-off. They chase dividends and get tiny returns, or they chase growth and get sleepless nights. But there's a smarter middle ground, a strategy that lets you seek more consistency in your cash flow and still participate when the market moves higher. I call it the balance point, and it's one of the most powerful covered call techniques I've ever used in my 40 years in the market. I remember my dad a few years ago telling me about how he got the shaft. Just like a lot of other older people, he was fooled into thinking that if he saved for the future and then invested in bonds, that he would make a nice income for the rest of his life in retirement. The problem is that interest rates are nowhere near being able to pay enough to live on, plus bonds have dropped more than 50% in the last few years. So I think he really got the shaft. I think he's right. So here's the quick roadmap. How you can create your own dividends. I'm going to show you some real life examples of that. And I'm going to discuss the risks and discuss how these covered calls can react in different markets. Now, by the way, this video is for educational and informational purposes. It does not constitute financial, investment, or legal advice. Okie dokie. Traditional portfolios are broken, and bonds, they don't keep up with inflation. Dividends, they're kind of a joke. You're lucky to get 3 or 4%. And the stock market, it's like an emotional roller coaster. If you're between 45 and 65 and you've worked really hard to build your wealth, well, you probably don't want to gamble it away, but you also don't want to settle for returns that barely buy groceries. That's the problem that the balance point solves. What most investors really want, most investors just want more reliability. They want room for a little bit of their portfolio to grow, and they want to control risk. And that's exactly what this strategy was designed for. Did you know that you can create your own dividends? And I'll show you how if you hang with me here. The balance point uses at the money covered calls. That means you sell call options right where the stock is trading. You collect immediate premium, and that's your income, while leaving room for upside if the stock rallies. Think of it like owning a rental property that pays your rent every month, but the property can still appreciate in value. You get income now, a little bit of growth later, and peace of mind in between. Here's what I always say. If you stay at the money on covered calls over time, you're going to make the most income of the 3 covered call strategies. It's not always easy though. And so here's how it looks on an option chain. These are just the calls on the option chain. But if you look at it, I'll walk you right through it, right? Hey gang, by the way, I can't show you this example and the math on this platform, unfortunately. But if you want to see this full video with all the math and the example and the option chain and everything, you got to visit my video gallery. It's at cashflowmachine.net/videos. And you may want to take a note of the timestamp like right now, and you can go right to the example if you don't want to watch the beginning of this video again. So what happens in different markets? Well, you need to know this. Let's say you're in an up market. Well, the stock gets called away or assigned. No big deal. It means you have the limited gain plus a little bit of income. That's what you were in this for. Bottom line is you want that to happen because it makes you your maximum profit on your trade. The same thing in a sideways market. You make the maximum profit on your trade. If it goes down a little bit, well, the premium can partially offset price movement depending on the volatility. But you're going to get some partial protection to the downside, okay? At the money doesn't protect you like in the money does. And you know I always talk about in the money. So the secret of cash flow, remember the time premium is the juice. It's the time value, okay? It's what keeps the cash flowing every single month. Collect it, reinvest it, and then your compounding becomes incredibly powerful. This is built for real investors. It works because it's repeatable. It works because it's not luck. It's a structured program. It's designed to work in multiple market conditions. And once you understand the mechanics, you can scale it easily. That's the cool thing about it. It's a strategy that works in every market environment, but ideally you want the environment to be moving up slightly. But that's why we call it a machine. Now that premium that you collect is what I call the juice. It's the time value baked into every option. Your goal is to focus on consistent premium capture that fits your risk tolerance. And when you reinvest it, the compounding is amazing. And if you stack this strategy across multiple positions, you can literally turn your portfolio into a paycheck machine. And it works because it's repeatable, it's structured, and it's backed by decades of market data. It doesn't rely on luck, it relies on math and discipline. And once you understand how to find the right stocks and sell the right calls, you can do this month after month for the rest of your life. Now, if this makes sense to you, if you want to see how to build this kind of position for yourself, I've created a 4-part free mini course that shows you the entire cash flow machine framework. You'll learn how to pick the right stocks in the right market at the right spot on the chart and then squeeze the juice for consistent income. Just click the link below to start that free. No credit cards, no catches, nothing like that. I'll see you inside the mini course. I love comments and I try to respond to every single comment. So if you want to put a comment in there, what would you rather do? Sell at the money and get more income, or sell out of the money and get some income plus some upside potential? I'm so curious to see how you're wired. Please put that in the comment. My program called the Cash Flow Machine, that's part of it, those cornerstones. We also have a part in there called the Cash Flow Compass and another part called the 20-minute freedom system, because I don't think you should be stuck behind a desk watching your stocks go up and down all day. By the way, if you want to join me on this ride, that's great. Subscribe to the Cash Flow Machine here on YouTube. If you're on YouTube, join the movement at cashflowmachine.net, or aim your phone right at that little barcode at the bottom and join my free Insider Tips newsletter. It comes out once a week, and we give you all the videos and even some breaking news from time to time. Also, if you want to learn how covered calls work and how they can help you create income, just check out this video and stay right here on YouTube and keep on watching. I'll see you soon. So that's the balance point, the sweet spot between income and maybe a little bit of growth. I'm Mark Yegi with the Cash Flow Machine. Subscribe for more videos like this and learn how to turn your portfolio into a paycheck machine. Thanks for watching. This content is for educational purposes only and is not financial advice.